My client Sally texted me last week from a dealership. She heard on the news the electric tax credit was expiring. She could save $7,500 if she bought a car before September 30th. She also learned that car loans are now tax deductible. What Sally didn't really know was that not only did she not qualify for the tax credit because she made too much money, her interest was also not going to be tax deductible because she made too much money for that also. Fortunately for Sally, she texted me and I said, come on in, we're gonna figure out how you can get this dream car that you've always wanted. Sally's car, a Tesla Model Y, a 2025 model, would have cost her about $51,200, brand new. If she had considered buying a 2-year used or even a 3-year used Tesla, that same Tesla now cost $23,500. This car has depreciated by 55% in just the first 3 years of having it. We could resell that car 2 years later for essentially $22,000, only $1,500 in depreciation over that time. And again, you've solved your goals of no gas, very low maintenance costs. The maintenance costs on a 5-year or less used Tesla are virtually non-existent. She would have all the bells and whistles that she wanted, the driver assistance programs like autopilot and full self-driving. When she went to the dealership, they said, we have a promotional rate at 4.99%. Would have cost Sally $966 a month, a number that she really didn't feel like she could afford. She came to me and she said, okay, well, how would I finance this thing? You have an investment account that we can borrow against using something called a securities-backed loan. You can borrow money against it. You can pay it back anytime you want. It's a very flexible type of a loan. What I wanted her to do was essentially only pay the interest plus a little bit of principal, because we knew we would be selling this car before year 5 started. Because this loan is tax deductible, she was going to get a tax break on her taxes. What she was actually paying was something closer to 4.25% when factoring in the tax deduction. She was able to make a payment of $145 a month for those 2 years. Now, just think about that. $966 versus $145 a month for virtually the same exact car. That saved her $10,000 per year and $20,000 over the life of that car. Here's what I learned building Verde. It's not about one perfect financial decision. It's about 50 small decisions that in aggregate add up to big money. Leasing versus buying a car. Choosing to pay your kids' school tuition all up front or stretching it out. Deciding on that store credit card versus the one that gives you the cash back that would impact you the most. The decisions that end up costing us tens of thousands, or in some cases hundreds of thousands of dollars, should benefit from the use of data, the use of guidance, and advice. Okay, so now you know the big planning mistakes and the daily decision traps. But there's one thing that derails even the best plans, and it's happening right now with these market swings. The advice I give clients during volatility, it goes against everything you'll hear from traditional advisors. And it's the reason some of my clients sleep well while everyone else is panicking.